Want my latest market insights? My latest report, Recession Risk Just Got Pulled Forward, is now available. Scan this QR code or click on the link in the description.
I think we could be getting a little bit of a charm and vanna effect from that sort of below 6,400 as those positions start to, as vol comes in, as these positions start to near the end of their life, you get those deltas dropping. The dealers don't need to be hedged as much against those positions. So it ends up being a little bit of a floor. So in a weird way, that gamma area can actually be supportive in a way. So that's sort of the funny thing when it comes to these sort of gamma ideas, is you kind of have to figure out it's multi-dimensional, right? It's not 3D chess, it's like 5D chess, and you're one-upping Trump there. So being a gamma trader involves passage of time, the movement. So it's an area where I always say it sort of moves through time and space. Sounds like Star Trek, but really it's time and space being movement. And so that's always fun to watch. But to the upside, we aren't really seeing the exuberance. I sort of talked about how, even though I haven't been super bullish on some parts of Google, I remember saying the upside is just so cheap again. And so my hedges have really exploded because of that upside that has now come to fruition. So I think that remains. When I start to see that upside, there was a chart I had at one point that showed the exuberance in the upside call skew that we saw in 2021 and other sort of bubbly periods. And we're not there at all. We're not even close to being there yet. So if AI has kind of pushed things up a long way, it could get a lot worse. We're not seeing overall, broadly speaking, we're not seeing the kind of excitement in skew. I had a student ask me that today and sort of say, well, does this happen when you see the skew blow out to the upside in a stock? What does that tell you? And what that means, guys, for everybody watching, is upside skew is the call, out of the money calls. Are they getting excited about something happening, or are they relatively neutral on it? So we see that often in perhaps gold a little bit. We see that in the coin space, where you start to see those upside call prices getting pushed up, but they're not exhausted yet. That's a sign that people are getting excitement, but that there's still room to the upside. When they really, really blow up, that's when you're at a point where it might be a sign of exhaustion. It doesn't necessarily pick the exact top, but it's where everyone's going, oh my gosh, I'm short, I got to cover. Everyone's just getting exuberant to the upside. So there's sort of various levels of that skew that play out. And we're really, and in 2021, and in a true melt up, you see that happen everywhere. It starts to spread to S&P 100 stocks. Everywhere you look, it can happen to mags. It can get truly, truly crazy. And we have not seen really anything like that at this point. So from that perspective, I think there's room for that to play out. I'm not saying it's going to play out, but there's room. There isn't as much excitement as you think at this point to the upside.
So not right now. And I do have that mini growth scare that is still in play, by the way. So it has not triggered, but it came really close actually on Tuesday morning before the Google antitrust decision. But as it relates to the gold, silver you're asking about, is silver stretched yet? Be careful when GDX hits 67. That's the prior high. But ultimately, I still have my intermarket is very strong for gold, silver, precious metals. GDXJ is in catch-up mode, which can be very explosive. The CPI is expected to continue to push a little bit higher, jobs lower. Dollar, by the way, you know I'm a big dollar bear, big picture, big bond bear, big picture, and hence gold bug of late. Like, just never wanted to be in a club. Yeah, that would invite me as a member, but they got it going on, don't they? Right? So, okay.
No, you called it. Down at 300, you said this is absolutely still a gold market. And you were
It still
right.
is, though, today. I'm looking at my stuff going, why isn't it getting rejected? Like, the only reason to short gold is we get a balanced budget of any kind. So ultimately, I understand that, but I'm talking about the swings, right, within a trend long, and we are wicked extended. But I think right now we have 67 for GDX as a strong resistance area on this little parabola, and I'm expecting, honestly, the potential for gold to go another probably 4 weeks before we can have a tradable top, according to my intermarket. Now that could change tomorrow. We could have something from a macro standpoint change that, like a very, very, very sharp dollar bounce. But right now the dollar is still digesting sideways and has not, repeat, not had any interest in getting going. But in short, 67 GDX was my upside target. That's from like June 3rd. Okay. So we're getting closer. That's all I can say about that. So if I have a target, I'm going to extrapolate and apply that to everything else. But I would expect some digestion when we hit GDX 67.
I'm looking at the skew in GLD, and it's not, yesterday it looks like it was quite steep. It's kind of relaxed a little bit today. I'm not sure where that came from or if the data is in fact good there, but it's your typical structure that typically that higher call skew, because people are looking for that continuation move to the upside. It always plays nicely into maybe callers. So if you get a little bit nervous about your position, you kind of pick a spot on the chart. You can't, it's hard to pick a spot on the chart when you're making new highs. So that's a tough thing to do. You want to probably wait for it to kind of settle down a little bit and then kind of tell you that it's found a place where it's found sellers. And that's how I usually treat breakout moves and parabola moves. I try not to get in the way because you're dying to get in the way. You're up money and you just can't wait to put that money in your pocket. But the right thing to do is kind of wait. You're not going to ever pick the high. And so if you wait for it to kind of find a bit of a top and maybe consolidate a little bit, now you've found a place where it seems to have found buyers and sellers that are a little bit more in agreement. So I think that's probably the play, is you just kind of let it happen at this point. But if you are nervous, callers are pricing kind of okay, where you sell out of the money calls and you can use that to maybe buy some downside to protect your position as well. If it's something that you truly don't want to get rid of. Some people come to me and say, I don't want to get rid of my stock. I've owned Microsoft since $40. Then you have to use options to kind of play the ranges and periods of time where you think that the market may have a little bit of difficulty.
The silver gold relationship that's being asked as it relates to what about CPI? So I'm showing you a monthly ratio of mine where I posted this and said, this is the most bullish chart. And this is on a monthly and it's a ratio, but this is my intermarket stuff. This is the most bullish chart I have. It's basically March 1st, you can see 2024, gold took off. And then, by the way, silver followed in April. But the point is, this is very extended from the mean. So every time it does this breakout in the past, it has methodically digested sideways before the next breakout, shallow pullback to the 10. You know how I'm crazy about the 10 EMA as a trend indicator. Yeah. And I love these patterns. Anyway, this is working, but this did not digest to the 10. It started getting very extended. Yeah. This is a parabola, but as it relates to silver, you did ask, how is it doing? And this is, again, when we were talking back in, this is on a weekly, but I could show you on a monthly. The idea is right here. First week of June, silver was on its way. So you can see the same type of beautiful behavior in silver. Does silver look done? Do you ever short all-time highs? No. In the same way I say, don't buy all-time lows. They can stay overbought. So this is still moving. Now, GDX is a little bit different. It's got some massive, big miners that have just moved higher, and this is all fabulous. And you've got then here, GDX. This is the kind of tell 67
sure
is
extended. Yeah, look back to when was the last time? When was the last time it got that extended, Samantha? Did it finally? That was back in March? No, April.
What are you talking about? Extended. It has not been this extended.
From the 10-day, like basically distance from the 10-day, ready for mean reversion.
Right here, which was post-tariff intervention. And then there was a little bit of a Bitcoin run. Anyway, it hit technically a trend line, then it scooped again. Long story short, you all know that this is a sector that you cannot short when it goes crazy. It's just like, it is one of those where the gold bugs have been waiting for many years. And once it starts to go, it starts to become a little bit unwieldy, because then the day chasers come in and, oh my goodness, they wreck it completely. But this is, look at this thing. This is still all-time highs. Way the heck back here. So this is the junior gold miner ETF, which is finally starting to get its Mick Jagger moves. Anyway, so it's extended, but I definitely don't have any reason to say short this right here. In the same way, it is very extended and it can come back and do a shallow digestion. There's no macro reason to remove these from your portfolio just because they're extended. I'm not quite sure if I'm answering the question. So in other words, I don't care about CPI and jobs as it relates to gold. This is a solid trend. What I care about is a reason, a macro trigger that would cause this to sell off aggressively. And I don't see any macro event risk coming in short of deflation, which we do not have.
In moves like that, I don't mind putting on little 1x2 put spreads, like a ratio put spread, because we're overextended. We're a little far from that 10-day, a little overextended, and you can sort of play. You buy something put a little bit out of the money, sell a couple down lower, especially when that put skew gets a little bit richer. And that gives you the ability to really play that downside for very little cost. And one of two things can happen. You can either get that pullback right away, and hopefully it doesn't go too far past the sort of 10-day or too far below that. in which case you end up having to buy the underlying, which is fine because you end up with actually a very, very good price relative to where it is now. Or we just keep going to the upside, and what you can end up doing is buy back those short puts as part of the 1x2. So then you end up with extremely cheap puts in a parabolic move that probably eventually has to have some sort of digestion. So those are some of my favorite trades, and especially when that downside put skew gets a little bit steep, which I probably isn't the case on GDX, because as we talked about earlier, that upside tends to be more favored. But there's lots of fun things you can do. You put on one of those, it's a bit of a hedge that you almost hope you're wrong. And if you put it on for a credit, then you can guarantee that you at least put a little bit of money in your jeans if it keeps going to the upside. And I remember doing that so many times as a market maker, and you end up with these cheap puts that you've forgotten about. And then lo and behold, something crazy happens. You've almost just forgotten they're in your book, and they go and they end up making you a mint. That's almost kind of like a finance your put trade.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.